Hello, everyone. Yes, we are live here on the webinar platform and also on our YouTube channel, SME Banking TV. So welcome to our webinar. My name is Olena Gryniuk. I'm CE Director at the SME Banking Club and will host today's session. And today we speak about PSD3. So let's discuss what's coming with the PSD3 directive, how exactly it affects open banking, and what should be done to embrace this change. My guest today is Olga Levandovska, Product and Innovation Manager and Open Banking and Open Finance Consultant at GD Next. Olga, welcome.
Hi, Olena. Hello, everyone. I'm glad to join you today.
Yeah,
And nice
thank
to
you.
see you again.
Thank you for joining. And yes, before we go to the topic, just a short information from my side. We plan our webinar for 40-50 minutes. So we are recording this webinar. So yeah, right after we finish, you will receive the link to the video and the presentation. And yes, we start from the presentation. And in the second part of the webinar, we have the Q&A session. So please type your questions in the chat, even during the presentation, and we will read them and answer them in the second part of the webinar. So this is it. I think we can start and get to our topic. So Olga, it's over you. Passing the word to you.
Thank you, Lena. Yeah, let's get started. We have pretty complex topic today, and I assume the audience who gathered together represent quite narrow experts, and if not, then I will try to be quite simple, and clear in my explanations. And even if you represent the payment service user, the regular consumer of payment services today, standard bank customer, let's say, it might be useful for you to know what to expect in terms of user protection. Yeah. So what's new in payment regulation? And let's follow the agenda. As Olena mentioned, we will touch several topics, all of them related to new payment services regulation. We can talk about PSD2, but we cannot do that, in fact, without general context of the regulation changes. And as you can see from my diagram, we have four fields, let's say four domains that are really close to each other, and one complements each other. Yeah. And you can see here that in the payments domain, there are several changes that some are upcoming, some are already in place, that are related to payment services. And of course, the number one is Payment Service Directive, but we cannot skip the topic of digital euro or instant payment regulation, also interchange fees and AML directives. All are here. And also worth to mention markets on crypto assets regulation, which is MiCA here. And security topic, it's always related to payments. Of course, they're not only payment frauds, but many of them, most of them, and I wouldn't lie to you, are related to payment industry. So all the security regulation you can see here is relevant to our topic today, as well as data protection and digital services. But we cannot focus on everything in one webinar, and I'm not an expert and a deep expert in all of the fields. So let's look closer to the changes, upcoming changes to the second payment service directive. And here, what really we know about the problems that were accumulated while the second directive was key part of the regulation. Let's do the overview of accumulated problems from PSD2. We know that there are 4 key problems identified in European markets, despite of course, numerous achievements of this regulation. And among them, that consumers are still at risk of fraud and kind of lack of confidence in that new and in the standard existing and new payment services. And that we know that open banking sector still functions quite imperfectly, and the supervisors in different member states in the European Union, they still were not consistent in power and obligations to really regulate the field. And of course, some uncompatible conditions for bank and non-banks payment service providers. So there are different consequences of these problems, consequence on the user side, consequence on open banking providers, that in different countries we have different situations, but many of them still face obstacles offering basic open banking services, and many of them didn't proceed to provide premium open finance services. So among the consequences, of course, quite higher costs for commercial operations that still have negative impact on the competitiveness in the European Union, and the easy access, easy entering conditions. So, of course, our core teams that dedicated a lot of time trying to find the goals to revise the current directive. They outlined, let's say, 4 key goals. And the first one is strengthen the user protection and the confidence of the user in payments. Then another goal is improve the competitiveness of open banking services. And 2 more, improve enforcement of implementation in member states. Let's say the same rules, same standards applied in all countries of the Union. And additional goal that appeared with time, of course, were to improve the access of payment system and bank accounts for non-bank payment service providers. And this is how these changes also approached another direction of electronic money institutions. What we see here is, in order to achieve the goals, European Commission created, in fact, 2 documents. And we now have the proposal not only for the 3rd Payment Service Directive, but we also have the proposal for Payment Service Regulation. So instead of 1, we have 2, but of course, that's not the full story. We know that the directive, PSD3, will also expand the regulation and supervision to electronic money institutions. And this is how the payment services were also regrouped and extended to e-money services. And achieving the goals, Payment Service Directive, now the new one introducing a good portion of fines and penalties for payment institutions, electronic money institutions, as a responsibility for the outcomes, for the approach, compliancy, and that will impact a lot on our industry in the open banking ecosystem, of course. So PSD3 will create rules on access and activity of providing payment services and e-money services, and the supervision, of some powers, tools of supervision of payment institutions. And this is the scope that will remain in Payment Service Directive. But we will have another big scope of rules and established practices, requirements that were found in Payment Service Regulation. And it established, first of all, uniform requirements for the provision of payments and e-money services, and defines the rules for transparency, conditions of providing information requirements for payment service, e-money services. And the second part of it, let's say, it's about rights and obligation of payment service providers, e-money service providers, but let's call them payment institutions both, and also the users of each of them. So I suggest look closer, on the changes, and we go one by one. Let's look first on the key changes of the Payment Service Directive, and then we switch to Payment Service Regulation. I will try to focus your attention. I know it's not an easy thing to digest all those changes and all the regulations, but let's try to do it. Let's try to outline key findings and analyze their impact on open banking ecosystem participants. So let's continue. 3 slides, just 3 slides, stay focused regarding the PSD3. What we have here, I identified key requirements, group of requirements, and then of course you will have this description on the slides, but I will explain easily what has changed. So in terms of, you know that in order to register payment service provider and to join the open banking ecosystem, there was a registration process that required initial capital foundation, and then in addition professional indemnity insurance. And in that requirements, we see the changes here. First of all, regarding the professional indemnity insurance, new directive says that yes, of course, you may hold a professional indemnity insurance, but understanding how difficult it is to apply for that type of insurance at the first stage when the business is just founded, this insurance may be substituted, with the initial capital. So instead of having the professional indemnity insurance, PISPs, SPs may just found the initial capital. And that initial capital has new requirements, again, for after the entering into force of this document. It increased a bit, correlated inflation, and now it's 50,000 euros for AISPs or PISPs. And by the way, I will use some terms here, but I truly believe that all of you are aware about these terms. If no, let me know that maybe in a chat, and Lena will comment. Okay, So what about the registration rules? Now we have the separate requirement regarding the registration in the country of operating. What does it mean? It means that if you want to operate in a state different from the home member state, and this country may require the local registration, of course, you will have to register an office there. An office and head office, yeah, let's say, in that country state. Then another group of requirements are related to using the agents, again, the branches, subsidiaries, and outsourcing services to provide your activities. What is important here? According to a new directive, all the member states shall be ensured that payments institutions inform all their payment service user on the fact that this payment institution is using an agent which is acting on behalf of this institution. This is very important. The same applies to the branches, yeah. And as to the process of registration of the branch, there is a difference because in the new legislation, while the registration of the new branch, you will have to approach, the information should be exchanged between the home member state and the host member state. And the registration process touches all of them. So there will be no this misinformation where in one of the EU countries there is no information about where the branches are of this particular payment institution are registered. And regarding the using of outsource, important is that all those payment institutions, ISPs, ASPs, that really intend to outsource or currently outsource operational functions should inform competent authority of their home member state about that. And moreover, in that case, they should be ensured that important operational functions or ICT system, information communication technology systems that are used for in an outsource, they are available for any further supervision, yeah, and there is ability to do that. And the next I missed that slide. And the next group of requirements, they are requirements regarding the supervision itself and the rules to withdraw the authorization. So here, regarding the supervision, now competent authorities are entitled to, first of all, require the payment institution to provide any information required to monitor the compliance, and the request should be satisfied within the defined time limit. And that's very important. What else? It's also competent authorities are entitled to carry out on-site inspections at the business's premises, any agent, distributor, branch. Of course, in case of operational and key technology services providers involvement, they are included as well. And on top of that, competent authorities of the local state will issue recommendations, and in case it is required, they can bend administrative provisions. This document also brings quite clear conditions when the authorization can be withdrawal. And I will stress only one here, and this is very important, in fact. The breach of payment institution obligation in terms of money laundering and terrorist financing prevention. So again, AML legislation is taken into consideration. In fact, for PSD3, this is in general all the key requirements. And as you can see, many other rules regarding the provision of the services, application of authorization, execution of payment, all others, they are shifted to payment service regulation. So if you are still here and in your focus, we can continue with the payment service regulation as a next step. Yeah, here we will have a bit more information. But again, I will not touch all the changes, only those that really related closely to open banking services. So again, we have general rules. Here I will start probably with, let's say, general introduction, that this document clearly defines which information should be explained, showed, confirmed with the payment service user. And of course, in the scope of this information, we can find information about exchange rates, fees, additional charges, and detailed information about the not only the payer but the payee, and all that impact at the end on the result of payment execution. So what is required from payment service provider? It is required to show information about fees and charges prior to the initiation of the payment, so that the user can be sure of how many fees he or she should pay with this payment transaction. The same to currency conversion. There is a derogation from information requirements for low-value payment instruments, but again, there is no more option for member states to adjust the spending limit amount, and now it is defined in the document, and we see there 50 euro per single payment and 200 euro daily limit. A bit more requirements about the single payment information. Also, there is obligation to inform payment service user about the alternative dispute resolution procedures, not only regarding the framework contracts, but also for any single payment transaction. Then we see that in payment account statements, since the changes have entered into force, user will need to access information that clearly identify the payee, so all the details about the payee. And payment service providers should also provide payment service users with estimated time for the funds to be received. For example, if the payee located outside the European Union, so time estimation of the value date, let's say, in case of any credit transfer or money remittance from EU to non-EU country. Sorry. Okay, on track. What else? There is a clear statement on the prohibition of surcharging not only credit transfer, and we mean here via open banking channels, but also direct debits in all currencies of the European Union. This is kind of extension here. New requirements on fallback interface of payment service providers, which are mostly banks, yeah, and additional requirements to data access interfaces, which are also related to performance. So let's look closer. There was and there is an imposition of having a dedicated interface for open banking data access, and this is clear, but new payment service regulation removed the requirement on account servicing payment service providers, so banks, to maintain permanently a fallback interface. So that means banks will be allowed to decide by themselves whether or no they see the need to support the fallback interface, of course, to bear additional costs for that. In addition to that, banks will be required to publish on their websites quarterly statistics on the availability and the performance of APIs or dedicated interfaces. And here we see metrics like number of successful requests over the total number of requests, and for each of the services supported, and the total volumes. Important also to mention that the response time via a dedicated interface shall not be longer than the response time via a direct interface, which is used for payment service user, or like regular online banking. And banks or other payment service providers shall make available a testing facility, including support, and allow to test their dedicated interfaces for third parties, which stress, again, this requirement, the strong need in a working sandbox, in a sandbox environment for each bank. And we can move on. Another interesting requirement, if we can say so, is that, in fact, bank can deny access to specific payment service providers like AISPs, PSPs, for objectively justified evidenced reasons. And about that fact, of course, the reasons shall relate to, let's say, fraudulent accesses or transactions, and banks should immediately inform, and not only inform but report, the incident to related competence authority and to the service provider itself. That is actually the requirement that some of the countries, let's say, allow to apply even in current days. A very important change that will affect also banks mostly, of course, but this change is more dedicated to the flexibility of management of the given permissions by user, So according to payment service regulation, banks should enable users to manage all the permissions in a convenient way. What does it mean? It means that banks should provide payment service user with a dashboard, convenient interface, where this user will be allowed to, let's say, revoke some of the given consents or even not only consents, but revoke some previously initiated recurring payments. Yeah, and that's we know from our customers. So this requirement will be quite costly for some banks to realize. And in respect to the cooperation with AISPs and PSPs, we have another change that now is related to a funds confirmation service. You know that according to PSD3, we have 3 core payment services, which is account information service, payment initiation service, and payments instruments issuance service. But in fact, the service that allows to confirm available amount on a specific account. And as it wasn't really used by the market, the decision was made to remove the service as a standalone separate open banking service. But now we have another requirement, and it says that banks shall ensure that the dedicated interface provided to payment initiation service providers with immediate confirmation upon request, simple answer yes or no, whether the amount necessary for the execution of a payment transaction is available on the payment account of the payer. And this is clear, and some countries are already included, and banks that requirement in the scope of the changes. Continuing the topic of using open banking services, there is an interesting requirement that now EBA is allowed on the basis of some criteria to prohibit temporarily the sale of certain payment product which would present certain risks. Yeah. So what does it mean? In case that the specific payment service is related to a high risk for the group of transactions, that means that EBA can stop providing such services. Freeze. Okay, so let me align the slides. Yeah. Let's continue. A short pause. And we have 2 more slides. Yeah. Another requirement, of course, applicable for the payment service providers of the payee. Now there is a requirement to match a unique identifier of a payee. The payment service provider of payee is required to provide its payment service user upon request with service checking that the unique identifier of the payee matches the name of the payee. Yeah. We see that requirement is implicated also in instant payment regulation, and this requirement of course is related to the number of frauds that appeared and were related to different, let's say, mismatching of the credentials, banking credentials of the payee. And in case incorrect unique identifier of the payee is applied, yeah, what are the consequences? What are the liabilities behind? PSPs of the payer is to be held liable for the full amount of the credit transfer in cases where payment service providers has failed to notify the payer of detected discrepancy between the unique identifier and the name of the payee provided. So this is one part of the responsibility, and where the liability is attributable to the payment service provider of the payee, the latter is to refund the financial damage incurred by the PSP of the payer. Yeah, so we see the full responsibility for such case. In case where payment initiation service provider, TPP, provides an incorrect unique identifier of a payee, so this payment service provider is held to be liable for the amount of the transaction. And these are also important changes that found place in a new payment service regulation. Also, an important change is that in terms of strong customer authentication, if the technical service provider is responsible for that flow, so now new liability provisions for those providers, TSPs, and they're responsible in case of failure to support strong customer authentication. Yeah. So let's talk the last, let's say, requirements. They will be more related to security and data protection. And in this area, in this field, we have the next changes. As it comes to the data protection, then it will be required also from the payment service providers process some specific categories of personal data. Yeah, so that will, in the context of regulation, that will involve banks, for example, with to more interaction with their customers in terms of GDPR. Then, in case of SA exemption, financial loss should be covered with the PSP that applied this exemption. It's also very important. And a good bench of rules for transaction monitoring is applied in a new document. It outlines a new provision to have the transaction monitoring mechanism in place and to provide them for the application of strong customer authentication, to improve prevention and detection of fraudulent transactions. And for the purpose of transaction monitoring, new provisions were added that allow PSPs to exchange, and they can do it on a voluntary basis, some personal data, such as unique identifier of a payee, as information sharing arrangement. So banks receive new opportunity to exchange the data in order then to simplify maybe the process of the verification of the payee. And for to increase the efforts to prevent payment frauds and report on payment frauds, payment service providers shall alert their customers via any appropriate mean when new forms of payment fraud emerge. And of course, taking into account most vulnerable groups of customers. And payment service providers shall organize at least annually training programs for their employees to increase awareness on payment fraud risk and share the new trends. So to onboard all of their employees with this problem. And my congratulations, we are almost done. The last slide with the changes, and then we can switch to the summary, to the impacts. Yeah. So regarding the accessibility of SCA, and you've probably heard about it before, that a new change is implied that banks should provide the tools for the strong customer authentication that will allow their customers with disabilities or older people or people with some lack of digital skills to be able to be authenticated, yeah, without maybe using a smartphone, which is not an easy task, in fact, but considering the customer base and the rising tools and technologies, European Commission believes that is doable. Yeah. In terms of SCA for account information service providers, very good news, in fact. We will see how it will be implicated and what will be the impact, but we will talk about it later today. According to the new legislation, strong customer authentication can be done by bank, yeah, or account servicing payment service provider, only for the first data access. And then account information service providers must require SCAs when the customers, for example, access one needs to be prolonged, yeah, and they will do it at least every 180 days. What does it mean? That means that for account information service, when payment service user provides the consent, it provides this consent to the payment service provider and authorizes with the bank only once. That means all other relations between customer and the TPP, yeah, or account information service provider, they will be regulated internally. And this will relieve banks from additional load, yeah, let's say, in the future. And some exemptions when SCA in that form that we know it for remote payment initiation can be skipped. Of course, it's for merchant initiation payment transactions after the mandate is settled, yeah, so for the next usage, and for mail orders and telephone orders initiated transactions. And I think we are done. Yeah, congratulations to myself, to all of you who are still here and listening to my explanations. And to summarize, I would like to say that yes, there are some changes. Not all of them are so significant, not all of them are critical. Partially, I would say payment service providers on both sides, those who expose APIs, those who use consume APIs, I would say the readiness is there, but of course, after this document will enter into force, and we still have up to 18 months since its approval. Hopefully it will happen this year. Yeah, so till 2026 approximately, all market participants, they still have time to digest, to analyze those new requirements, adapt, and then build, create a plan how to overcome future challenges. So let's summarize how these changes split it into two documents, how they really impact the different categories of open banking ecosystem. And of course, let's start first from the consumer. Consumer will get mostly benefits. Okay, it's my subjective opinion, but I'm also a consumer, so I should think about myself as well. Mostly benefits, and why? Because users will be more informed about the fees, charges, about the security measures that my service provider is take care. As a user, we all will be better protected with enhancing SEA tools and better navigated through fraud awareness. And we know that this awareness and understanding on lack of understanding of what's happening is usually the real reason why users do not want to be a part of open banking ecosystem. Then, of course, the flexibility in access management. So as users, we will have more power and possibilities to revoke some permission or change the access to our accounts. And of course, this document gives more financial inclusion via access to cash and account information. And it provides ability for the users to submit complaints. And what is also very important, get public information about non-compliant payment institutions. So from that perspective of protection of consumer rights, I think this document is more comprehensive, let's say. Then if we look at the other category, other group, which are third-party providers, payment initiation service providers, or account information service providers, impact for them is related mostly to stronger security requirements. And as TPP, if you haven't thought about applying two factors or strong customer authentication in your application, it's time for you to think about it. So SEA is a must in creating consumer trust. And of course, there will be more liabilities and requests regarding the transparency in front of your users. You will have to show more information about the agents that are acting on behalf of the branches, the outsourced services. Then it's the next, let's say, impact is that all these changes, they will help to protect the interests of the users, and will require from payment service providers as TPPs, to ensure continuity and reliability in their performance. Not only, so we are not talking only about the banks, the API exposer side, but for consumers. And of course, more financial responsibility this time, and we see quite tough sanctions in case of compliance breaches. Yeah, and again, I can remind you that as compliance breach is also the not following the AML legislation. And the third group, which are banks, which receive the most influence, they will be impacted the most. But again, I believe personally that will force somehow banks to think more about added value services that can be built on top of mandatory open banking services in order to bring more value to the existing customer base, to have more opportunities to increase the customer base, and of course to learn how to monetize open banking and open finance services. And by finding a unique, let's say, value proposition, bring benefits to the bank sides, and that will allow to not think about the costs required in order to implement those changes. But if to summarize, then what we have as an impact to the bank side is again strong demand to improve the technical performance. Yeah, performance that should be publicly available, performance that should follow some metrics and the rules. And regarding the banking industry, this document brings more clarity, and the rules will be the same, not different, but the same in every country of the Union, yeah? Which is now, in fact, not always like that. And yes, the changes will require investments in enhancement of solutions, improving the interfaces, supporting consent dashboards, yeah, supporting the changes in services that I mentioned today, for example, like confirmation of sufficient amount on the account during the payment transaction initiation, or for example, matching the unique identifier of the payee. All those changes will require, of course, implementation costs. Banks will share, let's say, this liability together with other payment service providers to refund payments in case of some mismatching of unique identifier, or if the error was done on their side. And banks together with the other providers will be a subject for fines and penalties. Yeah, and you can find in this document, I will not tell you the numbers, but you can find it easily in the documents. And we talk about the percentage from the annual turnover. So the penalties will be quite significant. Yeah, that's all about the impact. I hope you noted down important findings maybe for your business or for your activities. And now we can finalize the, let's say, my presentation. And I would like to say a few words regarding the what are the best way actually to embrace the change, because we all know that it's not possible to deny any change. It's better to embrace it, be ready, analyze and prepare yourself in advance, and then that will help you to make your journey smoothly. So nothing new, in fact, but just a quick summary from my side is look at your solutions, your current approach, define the gaps in compliance, because compliance first, and it will bring you loss and penalties. Revise the existing approaches in providing payment services, and maybe application of strong customer authentication, because these are two important components. And then define your limits, your possibilities, look at the team and the budget. Based on that, set the scope of the changes, and now you can set a priority of how those changes should be implemented. Considering the cost part, the benefit part, maybe you will find an option how to monetize one of the changes you are making. And of course, estimate the time frame required for implementation. The following logical step is define key milestones and then start implementation. But that's not the end of this process. It's just the next phase. And while implementing, of course, ensure that your compliance, let's say in terms of payment authorization and payment execution, is up to date, and it's according to the legislation. You follow the data protection rules. Ensure you provide your user with all the required information on payment service, payment itself, and also your business, and how you provide the service. Be transparent and ensure, of course, the implementation of transaction monitoring mechanism, fraud data sharing, and track your operational risks. Ensure continuity, reliability of the performance of all of the payment services that you provide. And this, let's say, checklist will help you to stay on track, not to stay behind the ecosystem, and find, I believe, new opportunities how to collaborate with your partners. Thank you for your attention.
Thank you very much, Olga, for a very detailed presentation. I think it was really needed because the topic is complicated, I would say. I have a question to you in the context, of course, of the SME customers, right? Because we are the SME Banking Club. So my question to you is, how will actually PSD3 increase the adoption of open banking for SME or business customers in general compared to the consumers? Because, of course, this adoption is much higher for the consumers at the current stage, and as you presented, it's very much focused in the PSD3 as well. So what are the main changes for the businesses, for business customers?
I believe that these changes will force banks to provide better or more services in open banking for business. Why? Because I know that previously that there were concerns related to, how can we apply strong customer authentication in case it's a legal entity, 2-3 people who are responsible for the account, so it's not secure, blah, blah, blah. And we know that there were concerns on that side. Maybe there were concerns on the customer side, and we see that in the new format, this interaction will be decreased to one, let's say, time process, and then it can be regulated between the PSP, for example, account information service provider, and this business customer, how to prolong and provide strong customer authentication internally. That's the one side, of the medal. Then, on the other hand, we know that more people getting trust to that channel of providing services, maybe will be involved. And involving myself as a private individual, I will most likely be involved with interaction with my bank as a business representative. So having good practice, a good user experience as a private individual customer will influence and interact me to repeat the same good positive experience with my business. So I see the positive movement here. That doesn't mean that it will dramatically change the situation just because these new regulations will enter into force. No. And it also depends on the bank will, not the readiness, but the will to interact with business customers in such a way. Yeah. So
what about open finance? Maybe very, very shortly. What's which data exactly banks will be obliged to give access to? And how you think actually banks can monetize it?
In terms of the types of data, I mean, the services, that everything will remain the same, as we can see. More optimization. Yeah, nothing else is considered as mandatory. But as from the demand side, then of course it's information about your activities in transactions. So statements, transaction history is a number one source of the information about your customer, and then you may apply on top some additional scorings. Then you may apply on top collaboration, for example, in case of financing, of external parties that are ready to take care about the risk management, they're ready to take care lending for smaller tickets, for smaller businesses with higher risk level. I believe the key here is a collaboration with other business service providers that are ready to take care about what bank is not ready to take care is at the moment. We know that there is a demand, and if there is a supply, you just can be the platform which merge the demand and supply. Match. Sorry.
And probably my last question to wrap up the webinar is just tell us how you as GD Next help banks to actually embrace and get prepared to the implementation of PSD3.
That's a very good question. As our company is also now a member of Open API group in Ukraine, and we adopting the standard of the European Union. We try to include already, partially at least, in the standard some of the requirements that are coming with the PSD3. That we see that in terms of security, in terms of strong customer authentication, in terms of unusing of services that are not really needed. So these changes can be implemented already. So currently we help, for example, one of the cases, we offer Ukrainian banks the open banking interfaces that will include partially, maybe not 100%, but most of the changes that will be required according to the next legislation document.
Okay, yes, I found the slides with you. All right. All right, so we don't have questions from the audience. Thank you very much for your
This
attention.
is
Yes.
quite complex, and it's just, let's say, I believe I helped you a bit understanding what will be changed, how it will be changed, in which directions, yeah, and what is the difference, and why we have the two documents instead of one. Hopefully now you can create your own roadmap how to come to the point and be ready to those changes.
All right. All right. So thank you very much. Thank you to all attendees. Thank you, Olga, very much for your engagement and presentation and all the attention to the topic. Thank you. And yeah, see you next time at our conference on November 15th in Vienna, where we will be discussing the topic of open banking and open finance. Yeah, so see you in 5 months.
Let's continue the discussion.
Yes. Let's continue discussion in person, and also the stream will be available online. Yeah. So thank you very much. Goodbye.
Thank you. Bye.